We're joined this week by Paul Pittman. He is the founder and now the executive chairman of Farmland Partners. Thanks for being with us.
Thank you. Glad you have me on.
All right, we got you on the road here from Canada, right?
That's correct. I'm on a little ski vacation.
Ah, nice. Hey, talk a little bit about your background. We grew up in the same state, different parts of the state, but you're a farm boy. Grew up in Illinois. How does that stick with you? I mean, that's something that kind of makes who you are, right?
Yeah, it sure does. I mean, I grew up in Illinois and around kind of farming my whole life, have an undergraduate degree from the University of Illinois in agriculture. Did a lot of different things with my career and along the way, but kind of came back to my roots. And what Farmland Partners is we own about $1.5 billion of farmland around the United States, and we rent it to family farm operators who farm that ground. And back to your point about Illinois, because of my history, that is the largest state for us. We own about 40,000 acres in the state of Illinois, very high quality farmland, of course.
You go back home much where you grew up?
Yeah, I do get back there probably 6-7 times a year. I'm back there pretty frequently.
What's been the change? What do you notice out there?
Well, the change is, in row crop agriculture. Let me broaden your question a little bit. The big change in row crop agriculture is the scale of the farmer. That's what's changed. There's, often a lot of criticism of that, but I at least think that criticism's not really fair. These are still family businesses. They're very successful family businesses. And those relatively large farmers is who feeds us. We in the United States have the luxury of getting our food much less expensively than frankly anybody in the world. And it's a very high quality product at a very good price. And that's because of that efficiency of that roughly 100,000 families who truly devote their full-time labor and effort to farming. The USDA will tell you there's 2 million farmers, but like 90% of the food's made by that 100,000 large farmers. But the idea that they're corporate, unless you think a corporation is a father and son who formed an LLC for liability protection, they're not corporate farmers. They're just highly successful family operators.
Part of your career, you were in the semiconductor business, from what I was reading, and I'm curious. We talked about what it's like when you go back home, but the technological changes are kind of unbelievable, really, right? No matter where you are on, you're a small guy doing your own thing, medium, big, whatever it is. Where's technology going to take us?
Well, the technology. So first, I always tell people, it's not as if technology just showed up in agriculture. Mm-hmm. Agriculture is a highly technologically sophisticated industry and has been for a long time. I mean, if you look at the history of agriculture, the first big technology change was mechanization, tractors, and everything that's happened since roughly the 1930s or so in mechanized agriculture. What John Deere does, what the other major brands do. They had advanced that technology so fast and so far. And it's not just in the horsepower pieces, it's in the planters, it's in the combines, it's everything. But, now we're actually in obviously seed and chemistry has always been kind of rapid technological advance. But today we're in sort of a big data, operations management sort of technology space. And what it does is, back to the point I made, it allows increased scale on a more efficient basis. And finding high quality labor has become incredibly difficult in all parts of the agriculture food chain. And so this technology, surge in the use of technology is actually making the industry more successful, more efficient. And, and the overriding goal of our food production industry should be to make food, high quality and inexpensive for the American consumer, frankly, the world's consumer in the case of the United States.
So the USDA, looking at these projections, is thinking that incomes may drop by a quarter or so this year. What's going to be the impact of that?
Well, first you got to have context. It's going to drop, but it's going to drop from some of the most profitable years ever. So, it's as if, using a pro football analogy. Last year, your favorite team won the Super Bowl, and this year they only won the pennant, so to speak. Does that mean that they had a 50% decline in success? Well, yeah, maybe, but they're still a great team. So it's a little bit that this income statistic gets bandied about often, and it's not a good thing, but it's also not the end of the world because it's measuring off of a high era. But to your specific question, we're seeing lower commodity prices, and that's putting farmers in some level of stress. So I think the impacts will be, less equipment will be purchased this year than was purchased last year. People will probably not invest as aggressively in what I call yield enhancing doodads, whether that's a piece of technology or a special fertilizer or some sort of special seed treatment, because they're not getting paid as well for that extra yield. So they're just not going to chase it as hard. And I think you will see some land come back onto the market where there are a small handful of farmers that'll really hit the wall in terms of distress. But remember, bankruptcy levels in agriculture are tiny compared to any other industry. Debt levels in agriculture, it's roughly 13% levered. That's also tiny. Most industries are around 50% based on debt financing. So we're going to see when I think about it in terms of land values, which is what we'll always think about, is it's an industry where you see a surge in value, which we just came out of the last several years, and then a plateau. You're not going to see big declines in high quality farmland. You're going to see it quit going up. You'll see occasional sale of that's got distress attached that may be a low number, but that's because of distress more than anything else. The fundamental market will hang together. It's what's so powerful about the asset class.
So how do you see values this year? Do you see just kind of steady coursing through the year? Is there going to be a decline? What do you think?
So I'm going to be a little bit of a contrarian, but I'm, a contrarian with the luxury of a lot of knowledge.
Sure.
You will see everybody reporting a decline, but that will not actually be true. Don't fall to that trap. And here's what they're actually reporting. Well, last year, a grape farm sold for $20,000 an acre. This year, a farm sold for $14,000 an acre, and it's in the same county. So therefore, farmland has come down $6,000 an acre off of the 20. That's not true. What actually is going to happen is last year there was a $20,000 sale. This year there was a farm family in financial distress, and they decided they need to strengthen their balance sheet. And they take the absolute worst farm that they own, because they don't sell their best farm. They sell the worst farm. Doesn't matter if it's a widow, doesn't matter if it's your parents just passed away. If you're going to sell something, you're selling the worst farm. So they're going to, that farm that I'm talking about selling at 14,000 never would have sold at 20 anyway. It's not there. It's a lower quality farm. And what will happen, it happens every time we go in. I've been in this industry now 25 years, so it's probably my fifth or sixth cycle. What will happen is volume of sales will collapse. True quality of farms being sold will go down substantially. All of these sort of, pop media people will talk about big decline in farmland, but no, that same high quality 20,000 acre piece of property in Grundy County, Iowa, to pick a county, is still $20,000. The good stuff just is not going to decline. It won't go up much. And the reason, of course, is that farmers are going to they're going to be less flush with cash than they've been in the last 3 or 4 years. But they've been through this, from 2015 to roughly 2020. They lived through the same thing. They're going to live through that kind of cycle again.
So do you see slightly more changing hands this year than last, or not?
No, probably less, quite a bit less. Assuming prices, because here's what happens. When prices are really, really strong, people that would have never thought about selling their grandparents' farm or their parents' farm, and the sellers are never the true operators unless they're in financial difficulty. The seller is the person who inherited the farm. And we're all, even if we need the money, we're emotionally attached to grandma's farm. We just are. And every owner is. So what pulls that person across the line and convinces them to sell is really high prices. So that sees volume go up, and we're now going to be in an environment where they're just not going to be that excited about the prices. So you'll see the volume go down.
How are you looking at borrowing costs? Basically a
Well,
push for a
borrowing
while,
costs,
no big changes till the end of the
bar,
year?
no, borrowing costs are going to start to come down. You'll start to see the forward yield curves back off. I think everybody's thinking there's going to be three reductions in Fed rate, unless inflation really surges
Starting
again.
in June?
I think you'll get that. I hope it starts in June. I mean, I don't know for sure. That seems, but I know what that everything I read in the newspaper suggests it's June's when it's going to start. But who knows? We'll have to just kind of wait and see. But it's definitely coming. I mean, inflation now. Everybody gets all bent out of shape about whether it's 1 or 2 percentage points higher than people expected. We are 300 basis points lower than we were 18 months ago. So the Fed's basically done its job, done it reasonably well. We haven't destroyed the economy, even though we put a lot of people under a lot of pressure. So I think you're going to see them do a pretty good job and start to back these rates off, and that will show up quite rapidly in farmer profitability and farmers' ability to be successful. Because operating loans, for example, are very expensive, but they're all they tend to be relatively short-term rates, so the adjustment will flow through quickly.
And then your fancy word of doodads, that then opens that back up?
It does. And look, you're going to have to see grain prices go back up, but look, all it takes is what happens in the grain markets for the three primary commodities, corn, soybeans, and wheat, is you get the economics we all took in high school or college actually works, right? Everybody pulls out the stops and plants just a little more and farms a little more aggressively and effectively. And this is worldwide. Corn's $7 or $6, and we get a modest surplus that just keeps building. Whether it's the United States or Canada or Argentina or Brazil or South Africa, Australia, everybody's performing just at their top of their game. We build up a worldwide surplus. It takes prices down substantially, which is what's happened. Everybody backs off just a little bit, and then all of a sudden, you've got a shortage of crops showing up, and then you throw in a bad weather event somewhere in the world, and all of a sudden prices take off. So how long will the relatively lower commodity prices last? My guess is somewhere in the neighborhood of 2 to 5 years. That's how long that cycle usually is, because that's how long it takes to chew through that extra surplus, see the production levels kind of come down. Because remember, fundamental food demand is growing every year, and land scarcity is also becoming more of a problem every year. So the long-term secular trends are totally behind the landowner, even though you get these disruptions from time to time because of excess supply of the commodities.
And it seems like China's been recently pulling back on wheat. Is that something to sweat?
No, China is highly manipulative in the way they purchase commodities all around the world. Go look at. There's no one who puts in more orders and then cancels. And then as soon as they cancel and the price comes down 20 cents, they come back in and make another order. Right? They look at an order like an option, and then they back in and out. And they don't. It's not just food. It's the way they buy copper. It's the way they buy steel. It's the way they buy basically everything that they're buying for their economy. And it's legal, so it's just you got to just recognize that's what's going on. So I think you're seeing, because the real question that you ask is, are the Chinese people going to quit eating wheat? Well, of course not.
Right.
So they're going to buy it sometime. And do they grow enough food in China to feed their entire population? No. So the only question is, when are they back in the market as buyers? It's just a matter of time.
Well, and I know you pay attention to politics. China's pretty much the target when you talk to some of these folks in Congress and even some of the states. We had that here in our state to try to China was already banned from buying farmland here in the state of Iowa, but they want to make sure that disclosure laws and everything, so we know who's owning what, and they're not trying to do it through another entity. How serious is this threat, do you think? Is it overblown because that happens in politics, or is that something we've got to pay attention to?
The threat is not serious, and neither are most of our politicians. It's just, this is virtue signaling BS, to be blunt. So there is essentially no ownership of farmland in the United States by the Chinese, nor should I think nor should there be. I mean, I frankly don't think we want them to own a whole lot of our farmland. But as a statistical matter, it's tiny. And if you take
400,000
away
acres or something, right?
If you take away solar and what's fundamentally industrial locations, which was associated, for example, with their purchase of Smithfield, the large hog producer and processor, there's nothing left. And so the right law would be, we don't want foreign entities owning farmland close to any sort of location that's relevant to national security. I think it was North Dakota or South Dakota where this big mess started. But yeah, that makes sense. Okay, but the way that we're approaching this is just nutty. It's one of the most important industries in the country. I mean, how about this for our national policy? Let's disincent foreigners to invest in our best industries. That sounds like a really bad policy when you think about it. And that's how you have to think about it. Everybody wants to kind of get on the evening news by saying something outrageous and dramatic. The reason I wouldn't let Chinese folks buy farmland in the United States is Americans can't buy farmland in China. So until you change that rule, fair is fair. Why should Canadians be able to buy? Well, because Canada is our friend and neighbor, and more or less there's open flows of funds back and forth between the countries. So what's the big deal? I mean, and when you go push into the statistics, the largest farmland owner in the United States is Canadians.
Canada, right?
And it's mostly timber, by the way, in Maine and other places close to Canada. And even, there's just not, I think the second biggest owner is either Germany or the Netherlands. I'm not actually worried about either the German people or the Dutch people taking over America. It's not a credible concern.
Well, let me ask you this, in light especially of what you just talked about. Let's say they invite you to DC, you're going to headline a dinner, you got every member of Congress sitting out in the audience. Just pretend with me in this scenario, because I realize it's not practical.
That is not going to happen if you know me. But anyway, they won't invite me.
But they're all sitting in the audience, right, with a pen and paper, like they legit want to listen to you. What do you want them to do when it comes to this space? Like, what do they need? What should they be what should they know? What should they be doing? Like real policy that would be beneficial, not politics.
Well, the policy would be to have some sort of broad recording concept of purchases of agriculture land by non-US persons or entities. The real challenge, though, in turning this into sensible policy, and by the way, I'm not sure it should be done on a federal level at all. It probably should be done on a state level. But the real challenge is a American citizen who has a passport, but was born in China and is of Chinese ethnicity, who fundamentally has historically worked for Chinese government-owned entities. It's a very hard situation because that person's an American citizen. And I think we all would say your ethnicity is irrelevant to your rights as an American citizen. That's the way it should be. But it could be a straw man transaction for what's really a Chinese entity, right? So you can't, when you have in our society, which is very relatively free and open, it's really hard to restrict this. Okay, I want to go buy farmland in China. I can't go become a Chinese citizen and go buy farmland, right? This is not going to happen. It can't happen. But this, the other way around, it does. So this whole policy sort of effort is going to be, it's going to be incredibly difficult to enforce if anybody really wants to get around it. And I certainly wouldn't do it, you know, on a national level, because if you got it wrong, you got it wrong everywhere. And if you do it on a state level, you know, you got 50 tries to get it right, so to speak.
All right, put ownership to the side, though. You got this audience of Congress in front of you. Ownership aside, what else do they need to be paying attention to that they don't understand?
Oh, I think they have to
truly help.
I think one of the most important things they need to pay attention to is the fundamental loss of farmland in the country. I mean, you are losing, I think over like a recent 20-year period, they've lost the equivalent of all the farmland you would have in Iowa or Illinois. You know, Iowa has slightly more land mass, and I think Iowa's 25 million acres or something like that. I could be wrong. You can check the stats if you want to. Illinois is slightly less than 21 or 22 million acres. But you've lost that much farmland, 20-some million acres in like a 20-year period of time. That is a huge issue when you start thinking about long-term, food supply in the world. And obviously the land we're losing is not all of Illinois or Iowa quality because it's spread all over the country, but it still sort of helps amplify the point. And where that becomes important is as we think about land use for solar power, land use for residential or commercial development. We got to think really carefully about what we're doing. And look, as a large owner of farmland, I'm not thrilled with the idea that I can't seek higher and better use opportunities for my farmland and for the farmland we manage. But on the other hand, at a national policy level, that's something we need to think about. You can't cover the whole place up with parking lots and solar panels and then still feed yourself.
As you're looking out at the country, what farm areas really have your attention, show the most potential right now?
I am convinced that the core of the Midwest, it's not just Illinois and Iowa, it's probably every state that touches either Illinois or Iowa, and probably every state that, you probably have a few more than that. That relatively high quality soils, good long growing season, and largely plenty of water is a very special place on a worldwide basis. And that to me is the best investment region in the country. Close sort of seconds would be the Delta, Arkansas, Louisiana, Mississippi region. The beauty of the Delta is more crop choices. You can get corn and rice mixed in with the other more traditional Midwest crops. But the infrastructure, the culture of agriculture is not quite as strong in that region, which is why I wouldn't make it as good as the Midwest. The other place in the country that is, I think, always fascinating and interesting is the Pacific Northwest. That Tri-Cities, Pasco, Washington kind of area. Very interesting region, unusual in the sense that it's fundamentally a desert, but because of the Columbia River and the other rivers, huge amounts of water. So you can grow some very, very interesting crops there. I don't see that region having the same long-term water challenges that California has. I think, California agriculture will gradually decline it'll take decades, but the sort of demands on a limited water supply, at the end of the day, that water is going to flow to the cities, not agriculture. It's just the reality. And so California ag, I think, is going to struggle with not only the reality of water availability, but the politics of water availability, such that it probably hurts the farm industry in California pretty bad over the next, 10, 20, 30 years.
I brought up DC a couple of times, but what you just talked about there, are enough people paying attention to that to look at this longer term where we might have to see some shifts because of water availability? Is there enough national focus on that?
No, there's not at all. I mean, California is a perfect example. I mean, the population of California has probably gone up by 30% or something since they built the last reservoir in the state. Okay. So just kind of, because California is actually a reasonably wet place. We think about it because it's always in the news as being a desert. But I mean, those redwood trees aren't growing because there's no rain, right? It's a rainy place. I mean, we're getting this winter, they're getting more snow in the Sierra than anywhere else in the United States. It's just that there's about a 6-month window in the middle of the year when there's essentially no rainfall, kind of from May 1st till November or so. And the common sense solution to that is reservoirs, and to capture the snowfall, capture the rainfall, hold it, use it through the summer. And that's what California had done to develop itself. And starting in roughly the 70s or 80s, building a reservoir has become almost impossible. And look, every time you add urban population, no matter what you're doing in terms of water conservation, it's more showers, it's more drinking, it's more toilet flushes, it's going to use water. And that's the real story of California. No, they have not invested in infrastructure, and they've let the population explode. You gotta make a change of some sort, and it's a hard change to make in that state in particular.
But more likely, you're going to see parts of the agricultural industry leave because of
Yeah, I
that
think
lack
you'll
of
see.
planning.
Well, I mean, you're seeing it right now. They put in a set of water restrictions several years ago that make groundwater pumping in particular very, very difficult. And you're going to see substantially less total acreage of almonds in particular, probably of pistachios, certainly of walnuts, than there's been there in the past. And the real problem when you start thinking about the nature of the industry in California is it has become a permanent crop industry, meaning trees and vines. And if you are a row crop farmer and you're scared about water, you basically, you take your Eastern Colorado farmer, they will farm differently depending on how much, rainfall they got in the winter and the spring going into the season. And they hold back on fertilizer, and they hold back on seed population and things like that to manage their costs, knowing that their limiting factor is the water. That whole mentality, which is sensible from a business perspective and an agronomic perspective, does not work in a permanent crop world. You've already got the tree there. You can't let it die. You've got to continue to invest in it. And so the minute there is uncertainty about water availability, the cost and risk of permanent crop farming skyrockets. And that's what's happening. I mean, you've now just had SGMA, which is the Groundwater Management Act I was talking about, was put in place several years ago. You've now just had 2 really wet years in California, but SGMA is making it difficult to access all that excess water because there's all kinds of pumping restrictions and things. And so people are still saying, look, I'm not going to replant the orchard. And the reason it'll take a decade or so, you won't necessarily go in and bulldoze an orchard you already planted, but you won't plant a new one. And when it comes time to replant that one, you'll say to yourself, I'm just not going to replant it because I'm not confident. I'm not confident in 25 years worth of water availability. And that's really your economic decision is it's a 25-year choice.
And don't they have so much working against them anyway when you're talking about you got to wait 5, 6, 7, 8 years, whatever, to see the fruits of your labor anyway? There's no quick.
There's no quick thing. I mean, you'll be your first commercial crop, meaning where you get probably revenue in excess of operating cost, is in most of the crops year 4. Some are as long as year 7. But even then, you're not really profitable yet. You probably got to get to year 7 or 8 in every crop before you're really having high yield, enough yield to really pay for the investment you made, not just cover your cultural costs for that year. So you're right. It's a long investment horizon, and you're not going to do it if you don't have certainty in water.
Hey, let's end with this. As you look ahead to the rest of the year, what's the thing that intrigues you? What are you going to be watching most?
I think from my perspective as someone that owns and manages for other people a lot of farmland, it's going to be these interest rates. Because for the farmland owner, set the farmer aside for a second, but as a farmland owner, that will help the market strengthen again in terms of purchasing interest, because it'll lower the cost of capital for investment in agriculture. It will also lower the cost of capital for all the other things that are a demand for farmland. It'll make housing take off, and housing is a big consumer of farmland, of course. And then the final point, from my perspective, is it'll make the farmer, at least even in a bad commodity price environment, will make the farmer slightly more profitable, which is certainly good for the industry on rents and everything else. So that's the thing to watch. Probably the same as every industry in the United States this year is watching what's going on with Fed policy.
Well, we appreciate the time. Thank you much.
Okay, thank you.